We just have a quick question here from Sandra, who says that some traders they know don't really like to trade intraday or the shorter time frames and rather chooses to trade on the higher time frames. But these traders are more technically focused. And Sandra says, in their opinion, the fundamentals make more sense on the shorter time frame and want to know our opinion on the matter. So as always, thanks for the question. Oftentimes you'll see that traders make a really big fuss about which trading strategy is the very best between fundamental analysis and technical analysis, and they often give many reasons for why the one is better than the other. But I mean, the real truth is that none of these two methods are better than the other. Both of them work when they are applied correctly or applied for the purpose to which they were intended for. And we can break it down into three super easy and simple steps. Step one, use the fundamental analysis to develop a macro fundamental bias for a particular instrument, whether that's a currency or a currency pair or a bond or a stock or a commodity or an equity index, it doesn't matter. Step two, determine whether the timing for an entry is right by basically analyzing, again, using the fundamentals to analyze the short term sentiment to see whether the market sentiment is in line to take a particular trade. For example, does the market have a reason today to be buying or selling this particular instrument? And step number three, after you've done that, use any one of the many technical methods out there to determine the best possible levels for entries, stop losses, and take profits. For me, it's really that simple. So to your question on whether to trade higher or lower time frames, it doesn't for me depend on the type of methodology you use between fundamentals and technicals. It depends on other things like what type of trader are you? What type of trades do you want to take? How much time do you have available? Do you have the time available to be an intraday trader, or is your available time only best suited for swing trades? What type of personality type do you have? Those type of things really should be the driver for the time frame you trade, as opposed to the method you use. For me personally, my personality type is built for short term moves, for intraday trading. And to your question of whether the fundamentals are better to use for the short term or the longer term, for me, it's both valid in the short and the medium term, just like the technicals are both valid for the short and the medium term. Personally, I won't be able to trade in the short term without using the fundamentals to determine an intraday sentiment bias. And I also won't be able to trade in the short term without the technicals, basically finding those good levels to enter and exit from. But of course, the same skills and methods can and should be used when you trade in the smaller time frames or the higher time frames. It doesn't really matter. I know there's certain technical guys out there that always teach people that you don't need the fundamentals, you just need the technicals, and the only thing you need is to look at the H4 time frame or the daily time frame, and then you're sorted, because that takes away all the noise. And to some extent, I can understand what they mean, but some of the very, very best trades that I've ever taken has been inside the noise, right? On that intraday basis, trading and riding those sentiment shifts up and down. So to your question, for me, I can't trade without any one of those two methods, whether it's in the short term or whether it's in the medium term or the longer term. Both techniques or methods for me are valid, and both of them put together work extremely nice when you know how to use them and for what they were intended for in the first place. So I really hope that helps, Sandra. Any other questions, don't hesitate to let us know.